Good afternoon, everybody. Welcome, welcome. How is everybody today? Hopefully you had a great trading day, trading morning, and we're able to bag some good winners today. Fingers crossed, of course. I just forgot my glasses. I thought things looked a little bit weird. There we go. All right. So before we jump on in, as always, make sure to swing on over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. From there, you're going to be able to register for email newsletter list. Inside that newsletter, we're going to cover a bunch of different things, whether it's stocks, options, crypto, doesn't matter. If it's moving, and of interest, really, it's going to be in that newsletter. Just recently revamped the entire thing, so it has a really good-looking layout, solid base to it, and it just looks awesome. I couldn't be happier with the way that the newsletter turned out, so make sure to sign up for that so that you don't miss anything important. Of course, along with that, click on the live trader room subscription and trial info. From there, you can sign up for a free 3-day trial in the room. You can hang out with us for a couple days, get your feet a little bit wet, ask some questions, trade along with us, or maybe just watch and see how we approach the markets. Doesn't matter, one way or another. It's a great way to kind of see how we approach the markets and, yeah, have some fun with us for a day or two, or 3 in this case. So, first of all, the news for tomorrow. You'll notice a distinct lack of things here. There's not a whole lot going on tomorrow for the news calendar, and that doesn't make me feel great in terms of what to expect for tomorrow. The past couple days have been extraordinarily slow, and, well, now we add to that a lack of catalyst, no news at all. It definitely causes some issues. Tentatively, tomorrow morning, and I believe later tonight going into tomorrow, we have the Bank of Japan press conferences. At 5 o'clock tomorrow morning, we have the CPI out of the Eurozone for May, forecasted at 1.9%. And that's it. No news announcements, nothing else to worry about. So with the way that this all kind of looks right now, one of those situations where it's probably going to be an early in, early out, head out for the weekend kind of thing. It just doesn't look like we are going to expect a whole lot going into tomorrow, and well, the past few days give us any clues. Probably is going to be the case. So, starting off with the euro. The euro, wow, man alive, did we nail the euro. The euro cycled right off of the highs at resistance, 18,265 and 18,520. And keep in mind, although it looks like a really big wick, that all actually happened in a couple seconds. That was when the European, what was it, the ECB press conferences and interest rate decisions and all of that came out at 7:30 this morning. And it caused a big spike up, an immediate drop right back down again. And since then, it has absolutely collapsed to the lows. From the area of interest we were talking about at 18,265 to the next area of support, it's dropped 0.02, which that's no joke. I mean, that's a huge move in the euro over the span of 4 hours. Well, I guess we'll give it 7 hours since we have another hour until this candle completes. Really, I mean, I don't think we could have nailed that one any better, but we did get the resistance, we got the drop, now we're looking for continuation. But there is a little bit of a caveat here, because with this amount of bearishness coming into the markets, generally speaking, it was too much too fast. Markets don't typically like seeing some huge candle like that and then follow up with another huge one. That doesn't typically happen very frequently. So more the anticipation is that obviously this has a bearish bias, but looking for a continuation to be a little bit more grindy. Probably along the lines of something like this, where we have that spike down and then it goes into a more sideways to bear type of channel. And it fits the bill for what we're expecting here. Now, we are cycling off of support 16,230, and it did hold on the initial test. That was a beautiful bounce there as well. Obviously not as good as the one up here. But the overall move itself, well, you know, from here, anticipating range to down as this market continues to kind of grind lower. Overall objective is to get back down towards the lows at around 15,540, or even better, 15,210. But, I mean, other than that, we've pretty much shattered every level of support in the way on the ECB news. It just tanked the euro. So, huge amount of movement to the downside on the euro, looking really, really good for continuation. So I am looking to be a seller in the euro. But the big thing, again, is that it's probably going to be a little bit choppier and more sideways. So anticipating trying to sell high into those little corrections to get the move back down to a new low. There's not really much else to talk about for the euro. It's pretty straightforward. It's just one humongous bear bar. That's probably the biggest bear bar, oh man, for a really long time. I mean, that's a giant candle. It is what it is. You know, the bears obviously own the market, and they're looking for continuation to the downside, and I will be right along with them looking for that continuation as well. So looking to sell retracements in the euro, pretty easy there. On gold, we had a little bit of a spike higher and a little bit of consolidation back and forth. Now, we did get the cycle off of our levels of resistance that worked out beautifully. But the big thing here is that we've broken above the wedge high, and we actually came back and tested it and bounced off of it as support. And that's showing that the buyers are trying to get that bull breakout going to the upside. They're not doing so well given the way that this candle looks right now, but they are trying, and that's an important clue, because if they fail, we know that they tried in the first place, which means that there are buyers that are likely still in this market, and if it starts turning back down again, they're going to be the ones that are hitting the exits, running for the hills, and well, when a buyer hits the exit, that is a sell, and fading the highs in a bear market off of levels of resistance, finding more sellers, it's a pretty big clue to expect more downside bias. So we have broken above the wedge. We haven't gotten back below it again, but like I was saying, if these buyers start choosing to hit the exit sooner than later, we could easily see this rush right back down again. Level of support down at 1298.1 is the objective, but there could be an intermediary objective a little bit higher at 1301.8, and honestly, just the big round number at 1300 might be magnet enough just to kind of suck price back down again. Either way, one area of interest, or one at least factor of interest, is really we're just not making new lows. Every time it tries to make a new low, fail to make a new low, fail to make a new low, fail to make a new low, but we are breaking new highs. Although not the best in the world, they are breaking new highs, and that does give me a little bit of a cause for concern. If the market does start turning down and we see those buyers hitting the exit, shoving into the sell side, I'm not necessarily convinced that they're going to be able to make it all the way back down to that 1285.2 area that we've been looking for. So instead, modifying that a little bit and saying, well, okay, if the buyers are propping the market up enough to disallow the sellers from pushing down, there are probably a lot of sellers who've been trying to get that continuation inside of here, and they're just not having any success. And that could possibly mean that when it does start coming down, all of those sellers start jumping out, just like I'm expecting the buyers to do here, and that could cause a bounce right back up and a potential low being formed that we don't come back from. So with gold, the anticipation is the sellers continuing to push back down, buyers exiting as they start running for the hills if we can get this to push down a little bit further. But once we start grinding back lower again, I'm not necessarily convinced that we have a reason to hold on for a low. More so, what I'm looking for is a push down to about, we'll call the intermediary low at 93.1, and that's going to be the area of interest for me. I'm looking for the sellers to fade off of the highs, which they have already done, push down to those lows, trap the lows, and then turn back up. The key here is that they cannot break the lows. And this creates a low probability longing scenario where buyers will be buying into these lows, their stops will be underneath these lows, and their target is going to be huge. I mean, we're talking, 3-4 to 1 in terms of risk reward, and that's the kind of concept that we're looking for here. At minimum 2 to 1. But right now, as it stands, sellers are assumed to be coming in, and buyers will be starting to hit the exits on weakness. If we can close this bar looking the way it does right now in the next 45 minutes or so, that would be a very good thing. Looking good, though, and looking for sellers to continue here on gold. Over on crude oil, still pretty range-bound, still pretty sideways, not a whole lot going on. We have broken above that 66.31 area. That is out of the way, and that's really what we wanted to see. We've been talking about for a while now, a couple days, where we need to get above that 66.31 if the buyers are going to make their claim, right? If they're going to try to get this going, they need to break above that 66.31, and it failed and failed and failed and failed and failed, and we finally, on the inventories, have the breakout move above. We're now starting to pull back. This area is of huge interest at 66.31, not to mention the fact that it's already kind of established as a level of support or resistance, given how many failures and bounces off of it we've already have. But that's kind of a line in the sand for crude. If the sellers are able to break back underneath 66.31, then there's a very good chance that we start rushing towards the downside, gunning for that 65.16 area and potentially lower to 64.12. If, however, the buyers are able to hold up price and disallow the sellers from breaking down, this could be a potential reversal point for a large long-term move back up towards those 70s. So this is very much a line in the sand, and I will be watching this level very closely. In terms of new levels of support or resistance, there's not a whole lot to work with. The resistance that was at 66.90, or just arguably the round number at 67, didn't really do a whole lot, kind of broke through it, popped back down. Not a whole lot working there. 66.31, I think, is the big level. Minor level below that at 65.96 could become of interest if the market decides to dip just a little bit below it. Right now, we haven't seen the proof from the buyers breaking above the moving averages or anything like that. This is purely just looking for a potential reversal zone at a big area of support and looking for a potential push back up into the 70s. But again, if they start failing below that 66.31, you're going to have a lot of buyers who are going to be running. And, well, when buyers are running, that means that sell side takes over. So kind of a line in the sand there at 31, and that's going to be the zone that I'm going to be keeping an eye on. We'll have to wait and see what they want to do there. And then we have the S&P. Now again, before we talk about the S&P, the Dow and, well, the Dow and the S&P are pretty closely related. The NASDAQ is breaking new record highs again. All-time highs are now at 72.8475, and, well, it doesn't look like they're done yet. The buyers just continue to slam the NASDAQ higher, and it doesn't seem like the gas pedal is being let off yet. So, expecting more bullishness on the NASDAQ at the very least, and that could have some residual buying over on the indexes across the board. Could be the S&P, the Dow, etc. But we also have to look at it from another perspective in that the NASDAQ is pushing record highs. They might be looking for a hedge. And if they're looking for a hedge, well, they're going to be selling into the other index markets. And that could very well explain why we're not getting them back up to those highs like the NASDAQ is pushing, because they're being utilized as hedges instead. On the S&P, support at 80.5 and 84.25 are gone. Just kind of broke through those without really much at all. And hasn't really had enough consistency to put in any new levels of support. We do have enough for resistance, kind of, but not really the best look in the world. Really more what I'm looking at is the fact that we have a wick failure, wick failure, wick failure, wick failure. There's obviously something up here, but there's no solid level to really keep our eyes on. So because of that, really, that just leads me to believe that the highs are going to be the objective, and that's going to be the zone of interest, maybe a little bit above the highs. We are talking the S&P, so a point above the highs wouldn't hurt my feelings. So we'll mark this as orange, caps lock, 3, and we'll put that as a dash dot. And that's going to be the area that I'm going to be keeping an eye on if we can get a pop to the upside, 92.75 on the S&P. Now, obviously, this is a bullish market. I don't really want to be fading against this, so we have to offset it a little bit. And that said, we also might want to keep an eye on potential buying areas. And very frequently when you have a well-established trend like we have here on the S&P, market participants, they like buying as cheap as possible, right? We want to get the best deal, especially in the markets. Our job is to make money and be a risk advisor, basically. And, well, right now, or risk assessors, whatever, we need a dip to get the best price possible. We need that fire sale, right? The blue light special, if you will. And a lot of times, traders will look for that with trend 786. So with the with trend 786, that's coming in at 27.60 half. And does that line up with anything else? Well, yeah, it does. We have another level of support that lines up pretty closely with that, not too far away at 59.75. So we have a couple other things that are stacking up on one another that could create an area of interest. Definitely something that I want to be keeping my eyes on. But really the big thing here is that this trend is still going on nice and strong. We're running into resistance at the highs, so I need a deeper pullback and a corrective phase back down to 27.56 or so. And we'll put a band on it, 27.56 up to 27.60. Kind of that zone is going to be the big zone of interest for buyers to begin coming in and pushing the market back higher again. If that begins to fail, then we're probably going to grind down to the wedge lows and find support there instead. One way or another, though, buyers are looking for support, and that's going to be what I'm keeping an eye on, is right around that area. Now, honestly, what I would really love is a with trend trap low, and that would be right there at 27.52, because what that's going to do is all of the buyers who've been long since way back there or even further back there, they're going to be trailing their stops up along with the markets. Right? They don't want to give anything back when it starts breaking away to new highs again, so they start locking their stops in. They have a stop there, and then it moves here, and then it moves here, and I don't think the stop has necessarily moved from right here. So this is kind of my bullseye that I'm looking for in terms of, that was a terribly drawn bullseye, but my Picasso version of a bullseye. That's where I'm looking to see a bunch of traders getting stopped out. And normally when a buyer is getting stopped out, you would think, well, that was a sell order, right? A buyer getting stopped out is a sell order. It should spike down. That's why I want to watch this area, because if buyers are still interested in this, they're going to absorb those stops and not allow it to break down much further through 27.52 before it starts bouncing back up again. So I really want to keep my eyes on the 27.52. If it can actually make it down there, chances are it won't. It'll probably have a higher low, but if it does, that's going to be a really big hot spot for a lot of traders looking for that upside objective to finally break to a new high along with the NASDAQ. you know, just kind of keep that strength going. Outside of that, everything looks pretty straightforward. I think the big thing that we're dealing with right now on the S&P is the fact that we're failing off at the top of the wedge. Want to see them come back and test the inside of the wedge as a potential level of resistance instead. But aside from that, the buyers are in, just looking for deeper corrections to buy into to give us some better prices to work with. And that's why my chart's not right. I thought those levels were off. So let me correct some of those levels because those were set on the wrong contract month. I was going to say, why are my prices all over the place? So that low, just a correction on the prices that we were talking about here. Let me put this on the highs. Apologies for that. 96, 97. There we go. So the high is at 27.97. That's the breakout above the highs, and the lows would be a break down to 55.75. Now we've got the levels in the right place. All right. So that gives us something a little bit easier to work with and not so out there in the middle of no man's land. That's really all we're looking for, is just a dip buy on the S&P. Chances are we're just looking for some better prices to continue this trend. So that's going to do it for the futures outlook. Now, the futures outlook as a whole, we actually have some stuff going on, right? This is actually kind of nice. We're breaking away from the, oh, well, we'll wait and see. Oh, well, we'll wait and see. Even though the markets have been pretty slow in the morning, the euro excluded from that, we are getting some halfway decent movement. And that is definitely offering up some opportunities. Still a little bit concerned going about, you know, tomorrow with the lack of news and how slow today in this week really has been. But aside from that, it's looking pretty good. So in terms of the stocks, the stocks that we're keeping an eye on, we've got a few of them of definite interest. But for the most part, you know, it's all the same ones. So there's not really anything new to talk about. Twitter and all of the other ones, and of course the ones that we talk about in the newsletter, those are definitely of interest as well. But if you have any markets that you want me to take a look at, feel free to type them in. Otherwise, we'll wrap it up a little bit earlier, and then we'll start thinking about what we want to do for tomorrow, or if we're going to trade tomorrow at all. Well, we'll see. You know, we'll see. Tomorrow might be a little bit slow. Give a couple minutes here for you folks to type in any markets you want me to take a look at. If I don't see any, then we will wrap it up. Yeah, big spike up on ZKIN. ZK International Group. Zulu Kilo India November, big spike up. Is that halted? Probably. With that big of a move, I'm not seeing any bid ask. Yeah, probably halted. Circuit breaker when it jumped $12 or 12.2%. Yeesh. Just be careful. Don't chase it. Chasing stocks that are running up like that and hitting halt after halt, I can get a little bit of a dangerous game. I'm not seeing any markets coming in, so that'll do it for today. As always, underneath the video, click on the subscribe button. To the right of the subscribe button, click on the notification little bell icon there, so you're notified every time we go live. And today is Thursday, so it'll be the last day that we do this going into the weekend. So enjoy the weekend. I hope you have a great trading day tomorrow. And like we always say, doesn't matter what market you're trading, always make a plan, trade the plan, follow those rules. You'll be A-okay. Until the next time, enjoy the weekend, and again, you know, happy trading. Fingers crossed we actually get some movement tomorrow. Man alive, I'm really hoping for it. But enjoy the weekend, rest up, and we will see you all on Monday. Have a good one.